It was another brutal day on Wall Street as coronavirus fears continue to impact the markets. Now, the Dow Jones lost nearly 3,000 points today, suffering its biggest one-day point drop ever. Now, the Federal Reserve made a second emergency interest rate cut over the weekend in response to the crisis. Local financial professional Brett Gottlieb joins us once again on the phone to talk about what this means for consumers. Brett, thank you once again. I appreciate your time. The Federal Reserve cut interest rates to near 0%. Why did they do this?
Hi, Maria. Thanks for having me again. Well, really, they're just trying anything at this point to ease the volatility that we're seeing in the market and give some level of, hopefully confidence to the consumers and the public, because there's so much moving and so many moving parts right now.
And it didn't quite work, did it? I mean, obviously this morning we saw the Dow Jones lose nearly 3,000 points.
Yeah, we thought there right away, we hit the circuit breaker again, and of course the market stopped for 15 minutes, and then we thought for a while maybe it was going to work its way. It got down to where it was only down about 4 or 5%, and then it just kind of spiraled beyond after that and closed down very, very significant. So it's putting a lot of pressure on the emotions of the investor right now, that's for sure.
Well, what does it mean for consumers at this point in time?
Well, I think the biggest thing we always come back to, and the times that we've been talking here, is we can't let emotions take over, and the changes that are going on, there's going to be, some impact to us. When it comes to what the Fed's doing, they're ultimately trying to create a better borrowing situation. They're trying to create the confidence for the consumer to say, okay, hey, we're going to help you some way. Lower interest rates means, lower potential interest on the credit cards if you have debt. If you have student loans, lower interest rate on those loans. Yes, they're fixed, but then when the time comes and the rate change occurs on those loans, you could have a lower rate on those down the road. Buying a new car, refinancing your house, anything to try and change the what's going out of your pocketbook on a monthly basis can ultimately help.
So that would definitely impact borrowing money in many ways then for many people.
Yes, it would. But there's the flip side of that. Lower interest rates also means, when we're talking about the stock market and what's happening in the market, where do I go for safety? I don't want to be in the stock market right now. I'm concerned. I don't like, seeing my account down 20, 30%. Where can I move to? And then that makes it challenging, because the cash also, you've got low interest rates. We're going to see over the next week or so, CD rates, savings rates, those are all going to start to drop drastically as well.
So how close should we be watching our retirement funds, our 401ks, everything else? What should we be doing right now, I guess, in terms of all of these pandemic fears and all this volatility?
Well, I think it comes back, number one is you need to reassess your personal risk tolerance. Everyone is at a different point in their plan. If you're 10 years out from retirement, or 20 years or 30 years out, you're going to have differing risk tolerance at those points. How much you've saved up, what your expenses are for retirement. All of that is going to drive what your risk tolerance is. And so we don't want to have this emotional reaction of, oh my gosh, I need to sell and move out. We need to sit back, determine what's going on, and then figure out a plan. And that doesn't mean do nothing, because one of the worst things to do is to just do nothing. It's actually look and see, do I have too much exposure? And if I do, one of the things to remember is, if stocks have come down as drastically as they have, there's a balancing act with the bond side, and that means bonds have maybe held or not come down as much. You should look at rebalancing. You should look at, hey, maybe I've got a lot of excess cash in the bank that I could infuse into the plan and start buying at these lower, more potentially valued prices. I don't know if the market's going to go up or down. I don't have a crystal ball, but taking advantage of these opportunities may be something to consider.
Well, I'm afraid this roller coaster ride that we're on is not going to end anytime soon. Brett Gottlieb, thank you so much, and obviously a great recommendation to go see a professional if you need to.
Thank you, Maria.